Hello, everyone. Welcome to today's webinar. I appreciate you attending. I'm going to give people a few minutes here to log into the software. And while we're doing that, we'll just take care of a couple of housekeeping items. So first of all, this is the state of staffing. This is unlocking 2025 growth in an uncertain economy. This is a session that I did at Staffing World in Nashville a couple weeks ago. And it was well received. We had a lot of people there that said, hey, can we bring this back? I'd love to have the rest of my leadership team hear this and participate in this. So that was kind of the onus of what led to today's webinar. As we get started, if you have questions, if you want to put something in the webinar chat, you can. If you want to put something in the Q&A panel, you can. I'm monitoring both of those. If I don't get to your questions, please just let me know, shoot me something directly, and I will attend to any of those questions as I can. Last but certainly not least, you are going to get this deck. There's a fair bit of research, a fair bit of economic data in this deck. I think you're going to find it really interesting and useful. But don't feel like you have to capture everything here on the fly, because we are making this deck available to everybody as part of this. So I can already see from the participant list some friendly faces, some people that I know. Welcome. Thank you so much. Also some new faces. And so I wanted to start with one of the ways that I've been sharing why you can trust us. And that's by telling you who you can't trust, which is most celebrities, but these couple in particular. Kyrie Irving on the shape of the earth. He said the earth is flat. I'm telling you, it's right in front of our faces. They lied to us. You should probably trust him if you're playing fantasy basketball, maybe not so much around the shape of the earth. Brooke Shields, this is one of the early ones. Now on Twitter, we have people, or X, I should say, we have people that make ridiculous statements all the time. But Brooke Shields was really kind of early in that, right? She said, smoking kills. If you're killed, you've lost a very important part of your life. Fantastic advice from Brooke. Axl Rose on dating. It's really hard to maintain a one-on-one relationship if the other person is not going to allow me to be with other people. And then maybe my favorite, Kanye. Damn, the NFL been around longer than our government. We've had 48 Super Bowls and only 44 presidents. I didn't know that. Obviously, he's not fully understanding how we elect presidents in this country versus how we do Super Bowls, but nonetheless, it was something to be looking at as a part of it. I think you can trust us a lot more. More than 5 million client talent internal staff surveys analyzed over the last 13 years in this industry. We actually do more around client experience, talent experience, employee experience than anybody in the world. We have more data than anybody in the world when it comes to the staffing industry. We've built and run CX programs for 300 plus staffing firms, about a third of SIA's largest. And these are my two wonderful children, Delaney and Weston. And according to their grades, they're, right there in the middle, right at the top of the bell curve. A lot of people less than them, a lot of people more than them. And that's just how we like it. And in fact, one of them got sixth place in a competitive pie eating contest. My son, this is him a couple years ago. He's getting consoled by his sister because apparently one of the key things as a parent, if your kid's going to be in a pie eating contest, is to let them know that they can stop eating the pie at any time, which I apparently did not do. But rest assured, he recovered. They all forgave me. And a couple years later, he came back with the victory. So nothing says pride like your kid winning now first place in a competitive pie eating contest. So let's jump into what we're here for today, which is where we are in this economic cycle. And I just felt like, as we were going through this session, I wanted to kind of have a movie theme on it. And so, this is obviously a classic Dumb and Dumber. And for those of us that really try to follow the economy and, say something intelligent about where it's going, I think we have felt like we're either dumb or dumber in the last couple of years. So let's see what we can kind of understand and look at here. This first chart is looking at the layoffs versus the discharges, right? And we have data actually through September on this. And the layoff data is the first data that we're looking at here. And you can see the layoffs are actually below what the 2-year average was leading up to the pandemic. And this is important to look at because when we look at quits and layoffs, what we were already seeing as we led into the 2020 pandemic was some changes in behavior there, and especially as it kind of came to the quits. When we look at the quits, what we see is that we're down about 11% versus pre-pandemic, and that's again the 2 years leading up to the pandemic. What's interesting that we didn't talk a lot about, and it kind of gets lost in this concept of the great resignation that we saw happening in 2021 and 2022, the first parts of 2022, that the 2 years leading up to the pandemic, we actually had more people quitting than historically we experienced on those given months. And so by kind of looking at that pre-pandemic as just the 2 years prior to that, it gives us kind of a better look comparing back to sort of what maybe was normal, right? Normalcy. But we really had already a very tight labor market. There was quite a bit of mobility, and we've really taken that and given it all back. And I think that this is a really important chart for our industry because, kind of like real estate, where, a realtor can do well in a buyer's market or a seller's market, but they don't do well in a stagnant market. That's kind of what we're seeing, right? We don't have layoffs or people getting fired at anything, really alarming on that. We're still below pre-pandemic. We're below the peak as well. And now we've also got people quitting at a lower rate than they have in recent history. And so the combination of those two things just means that there's a lot of kind of the status quo and a lot of sort of people waiting on that side of it as well. So on the hiring and the job opening, what we see is that the hire rate has actually dropped back down, the number of people getting hired each month overall. So the first question came in is just a clarification question asking, are we looking at staffing data here or overall employment data? And the answer to that is we're looking at overall employment data. So when we look at this, the number of hires has dropped down below that pre-pandemic level. And then the number of job openings is still above the pre-pandemic level, but it's down 34% off of that peak in recent data. And so really important to note that we continue to come down along those lines in a pretty significant manner. So I wanted to kind of focus a little bit on this chart right here. And this is looking at BLS, Bureau of Labor Statistics data, non-farm employment, which is overall employment, versus temporary help. And what you can see on this, like you don't have to really deep into the data to see that generally what we see is these two lines kind of travel directionally the same way. Temporary help typically is much higher or lower. And it has a little bit more noise in it, which is to say that we tend to grow faster when we're growing, and we tend to decline faster when we're declining. But what you could see if you look at October 2022, starting really in Q4 of 2022, we had this situation where all of a sudden now temporary help went into kind of a pretty significant decline, pretty significant free fall, while overall employment continued to climb. Now, a lot of people will point out that yes, overall employment continued to climb, but it's in just a couple of sectors, which there's some truth to that. Government, healthcare, a few other sectors have been kind of the key sectors that have added jobs. And then you also see people that will say, well, yes, that's also true, but when you look at this piece, like we have decoupled from overall employment in the past, and that's true, but that decoupling has generally been when there's been a recession coming, and will typically lead by 3 to 6 months overall employment into a recession, and then will oftentimes lead it out of the recession. So when we were seeing this in Q4 of 2022 and Q1 of 2023, what we were seeing is really what have historically been signs of a recession that never really came. And you can see overall employment, even though it is revised meaningfully down from the initial projections, still in these revised, which is what I'm showing here, show consistent growth over the course of the last 2 years, where temporary help has been on a decline. Shown another way, what we see here is a situation where we actually have the lowest rate since 2010. And it's down now to about 1.7%, the percentage of all employment that is temporary help employment. So that's something to really kind of keep in mind, right? That as the overall employment has grown, we've gotten a decreasing share of that growth, which has been really the biggest part of what has caused the malaise for this industry. And for those that are on the call that feel like, oh man, this has just been really feels longer than what we typically see. I thought I would run this data and kind of show you how this compares to the 2009 recession, and the recent sort of downturn at the pandemic. So in 2008, 2009, as an industry, we declined down to about July of 2009. And then we started to get better along those lines. And then 18 months in July of 2009, we actually started to see growth again, year over year basis. And so, that was a kind of, the Great Recession, as we called it, right? And it was, pretty long, 18 months before we started to get to year over year growth. Now, when we look at that compared to January 2019 to August 2022, the first thing I want to point out is that 2019, even leading into the pandemic, was actually decline for us, year over year decline. It was, pretty flat, but it was definitely technically a little bit down when it came to employment. Revenue was up because as we were near that full employment, we were doing a pretty good job of being able to, take some additional price and get some margin out of that as well. But now you look at this in 2020 when we went to the bottom at 3 months. That was the worst point, was 3 months into that recession. And then you could see 14 months before we started growing as well. So keep those both in mind as I overlay now from October of 2022 until October of 2024. We're now in the 25th month, technically, as a part of that. And we are still down near the very low point of what that was. We've been traveling at about 10% down year over year for the ASA staffing index the entire year as a part of it. And that's the data that I'm showing here, is that weekly index as a part of what you're seeing on the screen. So when you feel like, boy, this has been historically long, it really has. We've had many deeper where we have, as an industry, lost a bigger percentage. But we've not actually, since we've been tracking this in the 90s, we've not really had a time where we've been down for longer than this. And so I've been having conversations with leadership teams and kind of have this ongoing list that I've compiled that I'm running by people. And I'd love for people in the chat, if you're up for it, to put, what do you think is the reason that overall employment's been growing, the economy's been growing, and yet temporary help has been on the decline for the last couple of years? Some of the things that I know that we've seen on this, I had talent hoarding up there. I heard that from a number of executives. And then I eventually sort of crossed that out because a very good point was made to me, which was, if we were really seeing talent hoarding, you would expect to see earnings really have an impact in the public markets. And that's not really been the case. Growth has been slower, but earnings have actually been really quite strong. And so it's hard to believe that we're really hoarding talent that we don't need in that case. Certainly there's this post-pandemic reset. In the IT engineering space, we are seeing more SOW work, more independent contractors, consultants. In the light industrial space, hearing many more instances of people taking over programs and coming into a group with a large number of undocumented workers, higher than typical, what they would typically see. Increased automation. And I think that, increased nearshoring and offshoring on the IT consulting side. Certainly healthcare has fought not only kind of a pandemic reset from the unsustainable demand, but also a little bit of a backlash from the pandemic price increases as a part of this. And what I'm really kind of coming down to is this belief that a lot of this is really inflation related and pricing related. And so as we look at that side of it, I think that there's some real reason to believe that, as the inflation has increased, as pricing got more difficult on that side, that you saw people start to try to find places to cut costs. And sometimes that meant that, they invested in automation so they didn't have to hire as many people. Sometimes that meant that they maybe moved some things offshore to get some price breaks there. Or they used independent contractors at a higher basis to avoid some of the overhead costs. So there's a lot of things I think are impacting that. And so, what might be next is sort of where we're headed, right? And sort of Lord of the Rings-ish, we're on this trek. Where that trek might go is, I think, going to be interesting to see. This is the SIA and the Bullhorn Staffing Index, and what you can see is that, if you're really looking at this closely with an optimistic eye, certainly on the commercial side, we are up a little bit from the low point. They, on the commercial side, had pretty similar to what the ASA index has seen year over year, which is about a 10% decline. But now they've come back off of that bottom a little bit the last few months, really since July. We've seen some increases there. And then, the professional still seems to be, down 14% and in, kind of not having that positive movement as well. One of the things to look at is this labor leverage ratio. This is the ratio of quits to layoffs, and this speaks a little bit to some of the mobility on this piece of it. But as you're looking at this, as it's coming down, that puts pressure on temporary staffing, because what that means is that there are less positions to be filled and backfilled as a part of this. And you can see it's really been coming down during that entire time period. So what I'm watching for here on this labor leverage ratio is, when is it going to really like level out, and then hopefully start to go back up a little bit or kind of normalize. But as you can see, we're still now coming back to a labor leverage ratio that is just now getting in line with what that pre-pandemic historical looked like. One of the things that I think is kind of interesting is, as you look at this over time here, you could start to see the temporary help year-over-year growth has kind of flattened along those lines, and we expect that that labor leverage ratio starts to sort of flatten out instead of being on the decline. We think that that'll be good for the industry. Looking at this anxious index, this is really interesting to me. This is from the Federal Reserve Bank of Philadelphia. And this is just the percentage. The orange there is the percentage of people of economists who expect there will be a recession in the next quarter. And so you can sort of look at it this way: the higher the percentage of people that think there's going to be a recession in the next quarter, the more anxious the economists are. And if you're looking at this against temporary help, what you see is that they're really kind of inversely proportional to one another. And so I actually flipped that anxiousness index and call it kind of an optimism index. But basically, this is the percentage of economists who do not think that there will be a recession in the next quarter. And so you can see there it really lines up, and it's a leading indicator of what we're seeing from a staffing standpoint. So as we're looking through that, as that's coming, as that optimism is going up, which is just now kind of started to a little bit, what we're seeing here, I think, is some positive news for the staffing industry as we go forward. So what does it all mean? Zoltar from the movie Big, such a great flick. If you haven't watched that in a while, it does hold up. I think that there were really three areas of uncertainty that have been impacting the market, specifically the temporary help market. Interest rates continuing to rise, inflation continuing to be too high. And those were really two items that most people would agree we've probably hit the worst. The interest rates are starting to come down. Inflation has started to normalize pretty close to the Fed's target rate. And so the last piece of this was the presidential election fallout. And regardless of who you voted for or what you think of the election results, I think for this industry, it was actually quite good that we had a very clear-cut winner. And so that economic uncertainty and the presidential uncertainty has really almost gone completely away, which I think will be that last piece that will allow us to kind of get back into a positive mode. I don't exactly know what that's going to mean for the industry. I do know some of the models that I've seen by ASA and others are looking at pretty flat through Q1 and Q2 with growth in Q3 and Q4. That really makes sense based on what I'm seeing here. I think that we're kind of past the most of that uncertainty. And so that should lead to, I think, in my opinion, mild growth in Q1 and Q2, and then slightly accelerating growth in Q3 and Q4. So we'll see how that sort of falls out. And this will obviously differ significantly by sector as well. So, I still have to grow. What should you do? And so let's jump into this really kind of 12-step program that we have here. Dare to be different. Get on the day one list of prospects. Live a story of specialization. De-risk the decision to use your firm. Remove friction in your process. Use technology to rehumanize the experience. Get really good at customer expansion. Invest in sales enablement. Help customers get creative to meet their needs, track and amplify your recruiter's reputation, improve retention rate of your placed talent, and focus and reward improvement in the rehire rate. So we're going to go through each of these 12. And again, if you have questions on these as we're going through them, please don't hesitate to put something in the chat or the Q&A tab, and I'll take those as we go. The first is dare to be different in a way that matters. Over half of clients and job candidates say that basically they believe all staffing firms are the same. We have to do a better job of standing out and do that in a way that really matters. I'll go into some more detail on ways that I think that you can do this, but the experience is a key component of this. What are you doing to really be wow worthy, to create that word of mouth? And I will sometimes lead sessions with leaders where I'll ask them to lay out all the ways that they're different. And then I'll ask them, okay, go back now and look at it. And how many of those ways are really exciting to your clients or your candidates? And oftentimes the number of ways that they're different versus the number of ways that they actually are, excitingly different to clients and candidates is pretty revealing. And so really make sure that you're leaning in on that differentiation strategy, because the ones that are really differentiating, the ones that are really targeting a specific job market, a particular type of skill set, particular industry, those are the people that we've seen actually be able to weather this storm much better than the others as a part of this. This I thought was really fascinating. So this is some Google research that we found around general B2B buying. And what they found was that 81% of buyers have what they call a day one list. And this is before they do any research at all. They have vendors that they think might be a good solution to the problems that they're trying to solve. And I thought that was really interesting, right? So that really means that we want to be, if you think back to like those entry level marketing classes, and you have that awareness set, and then you have the consideration set. What this is really saying is that that's really wildly important in a B2B setting. And then we go one step further, and this kind of blew my mind. So 92% of people ultimately bought from a vendor that was on that day one list. Let that sink in for a second, right? So what that means is that if you were not on that day one list, you have an 8% chance, even if you get on that day one list, or if you get on that list later, of actually being the vendor that gets selected. And so in the research that we do in partnership with ASA and Monster Career Builder and staffing referrals and Clear Edge Marketing, we asked a similar question. And what we found is that we're less likely to have a day one list. Only 64%, so still 2/3, right, had a day one list where at least one vendor that they were considering out of the gate. But an even bigger percentage actually bought from the vendor that was on that day one list. And so really, as that breaks down, kind of what we see is that about 1/3 of the time people don't have a day one list. And so what do they do then? They try to build at least a starting point of that list one of two ways. And this is very, very clear from the data. They either go out to their network and say, hey, does anybody have a staffing firm that they've used that they like, that you could put me in touch with? Okay, so the referral and the word of mouth. Or they go online and they search. And they look for typically IT staffing firm, right? They look for something that is specific. It's not just staffing firm, not just staffing agency. They look for something specific related to their hiring needs or their sector as a part of it. So 1/3 of the time, there's no day one list. If there is a day one list, there's typically between 2 and 3 firms that are on that day one list. And on average, or typically, it's about 3 firms, sometimes a few more, sometimes 1 or 2 less. But that's really a critical piece. So when we think about this, I want you to kind of be viewing the rest of what I'm going to share today through this concept of, are we on this day one list? Because that really says, okay, thought leadership is critical. How are you bringing new data? New research, new best practices. How are you breaking through that noise of all of these other marketers that are trying to reach your audience, so that when somebody has a need, they go, oh, you know what? We need a machinist. Oh, I think that ABC Staffing does that. I remember they put out this guide to hiring hiring machinists that I look at each year, right? That type of thing really starts to matter. And so you have to really make sure that you're taking part in that. Question in the Q&A tab: if we're not on the day one list, what's the best way to break into that consideration? That's a really good point. You have a different challenge as you're going through this if you're not on that day one list. And now it really is sort of beholden to your sales process, actually hitting them while they're in this search and while they're open for this. And so if you're not on that day one list, you have to really kind of break through and show why you deserve to be there. Part of that, and we'll talk a little bit more about this in one of the other sections, is de-risking whether you're there, right? So you weren't initially in consideration. So that means you have an even bigger job to prove to them that they should be considering you and that you are not going to let them down. So we have the second piece of this, which is the deep expertise and excellence to give you a sustainable competitive advantage. So this is, I love this Liam Neeson taken, I can't remember which comedian that I listened to that sort of pointed this out and said, look, at some point we have to question how good of a parent this guy is. His daughter's been kidnapped 3 different times. But if you remember, he has that famous line from this, that's on the screen. I do have a very particular set of skills that I have acquired over a very long career, right? And he's speaking about how he's able to track them down and get them back. Well, this sort of specific set of skills is really critical. And in times of economic uncertainty, everybody that is a buyer, everybody that is a job candidate, feels even more pressure to make the right choice of a partner during this time period. And so that means that you have to de-risk that decision. And what happens, what I see happening too often, is staffing firms will say, okay, it's really difficult right now. Who's hiring? Let me go try to get in with that group. And you can make that work, but it's really, really challenging. What I think works better is to not widen who you might work with, but actually narrow your efforts on who you might work with, and have areas where you have a really, really compelling story as a part of this. And so the way that the data kind of suggests we have this is that the first piece of kind of what people are looking for is they're trying to understand, do they have expertise in workforce management, hiring side of it? And so things that they kind of look at that give them peace of mind on that are things like, the tenure of your recruiters, your credentials, awards that you've won, things along those lines, how clear your website is in sort of laying out the types of things that you can do. But the problem is that we see most staffing firms kind of stop here. But the reality is that the next thing that they're trying to answer is, if you think of that first level is, can they do this type of work? The second level is, can they do this type of work, and do they know my industry, my situation as a part of this? And so this is where the more specific you can be, the better. If you're dealing with a small manufacturer that has 75 employees, the more that you can actually show that you have a lot of credibility, expertise in working with similar manufacturers in that similar size range, the more impactful it's going to be. So it's not enough just that you know a lot about hiring and compliance and making sure that you do this right. You have to be able to take that next step and also show that you are expert in their industry, expert in hiring the skill sets that they need. And this is where, roundtables, industry-specific marketing. I talked to a leader of a really specialized staffing firm the other day, and she told me something that I thought was really interesting. She said, a lot of our customers don't even really know, they don't even really think of us as a staffing firm. They think of us as somebody that's helping in their industry, right? They think of us more as an industry peer than they do as an industry vendor. And that's really critical, right? That's sort of nirvana when you can get to that point. So now we've answered the question of, hey, are they, are they expert in their domain? And we've answered the question of that, do they have expertise in my space with companies like mine? Now that third level is, where is the evidence that they do deliver, right? Now I'm okay believing that they can deliver and that they're well equipped to deliver, but the evidence of that they do deliver are things like online reputation, testimonials, the reputation of the individuals that are on that team as a part of it. Those are the types of things that really matter as a part of it. And so one of the things that came out of this last round of research that we did that I thought was really interesting is that we did see, a lot of competitive threats from what we would say is non-traditional staffing, through SOWs, independent contractors, investing in automation, things along those lines that I shared before. And you can really see here down at the bottom, these last three were ones that, have significantly increased, somewhat increased over 2 years ago. And so we just have to understand our value proposition as it sits within a space where there are multiple avenues to get to the end result as a part of that. Risky business, right? I talked a little bit about this, de-risking your firm as a part of this. And so, what does that actually look like? Well, when we talk to hiring managers, 51% thought that the current state of the economy was either fair or poor, and 2 in 5 thought that the economy was actually getting worse, not better. When we look at it through that lens, these are people that cannot afford to make the wrong decision about who to partner with. They cannot afford to spend a lot of time with the wrong partners, the wrong situations on this. So you really have to continue to work to de-risk that decision of working with you as well. Removing friction in the process. We've been talking about this as an industry for a while. In fact, I presented an executive vision on this from the main stage briefly, talking about the consumerization, or some people will call it the Amazonification of B2B. And really what we see here is, certainly we've always kind of been a business to consumer industry in one regard, which is that our job candidates are really consumers, right? And they expect that frictionless process, similar to as they go on and they search for something and they order something and they find something online. And they know where they're at in the process. They have that. There's nothing, they can do it whenever they want, and they have control over that. Well, we're really seeing that on the B2B side too, and especially as you look at Gen Y and younger being a bigger and bigger percentage of the decision makers in the space, right? So Gen Y and younger is now the largest segment of the workforce. And in fact, by 2029, it'll be about 2/3 of the workforce will be Gen Y and younger. So Gen Y is now quickly becoming also the age group that is the biggest age group of decision makers as well. And so as you look at that, you have to understand that that group is used to having things happen when they want them to happen, as they want them to happen, and to be in control of that. And so when we look at this, what we really want to do when we architect the experience, whether it be from a client standpoint or a job candidate standpoint, when you're architecting that experience, what they really want is they want access to the expressway. And that means that, through your process and your technology, you can, as a customer of your firm or a job candidate that's potentially applying to jobs through your firm, you can do this when you want. You can choose where you're going, when you're going, how fast you're going to get there. And that's sort of this concept of being on the freeway. But they want a lot of exit ramps. And those exit ramps are where it's possible to actually come in and really, provide expertise, provide context, provide guidance, provide answers to questions, unstick them if they get stuck at some point in your process. And those are the types of things that are really, really impactful. And it kind of goes with this next piece, which is we'll go Terminator 2 on this, right? We want to utilize technology to gain efficiency, but we want to always be thinking about, I think of it as like, the income that you get in your job. And a part of that income you put towards, your bills and things like that. But a part of your income you put away for the future, right? And for retirement and things along those lines. Well, the same thing goes with technology and productivity improvements. As you gain productivity, you should consume some of that productivity, right? It should make your business better. But you should take a little bit of that productivity and set it aside for the future. And the way that you do that is setting that time aside so that you can really rehumanize that impact as you look at it. What we saw when we asked job candidates is that the majority of them said the job search has become more efficient, but it also said that the job search has gotten less personal and less human as a part of it. And so we actually asked organizations, we said, hiring managers, what's your current level of AI adoption in the hiring process? And you can see, all but 14% are at least considering, exploring early adoption or further on that side of it. And then, the perceptions that they have of the impact it's going to have on working with a staffing firm are really, consistent across the side. So we see 70% said that they thought it'd have a positive impact on candidate match. 75% said that it'd have a positive impact on the time to fill. 61% on the cost. Just across the board, they expect things to be more efficient, more effective, and to improve that piece of it. So I know many of you on this call are utilizing different AI tools now. I would just continue to tell you to really lean in on that as well. Headed to the next movie theme here, Show Me the Money. This is from Jerry Maguire, famous line, famous path there as well. And I just want to really reinforce this, that what we see is that there is a significant amount of growth that is potentially possible within your existing accounts. What we found was that on average, the vast majority of people are only spending some of their budget with their primary staffing firm. And so, in 4 out of 5 cases, even if you're the primary staffing firm, you're not getting all of their spend and all of their budget. And so, what you have to do is really, make sure that you've earned the right to expand that business, but then you need to identify those opportunities. And the way that you identify those opportunities is by being close to those accounts and pushing along those lines. And then again, leverage that proof of excellence, right? This is where the folks that are doing the NPS surveys with us are really taking that and using that as a targeted list, right? If somebody gives you a 9 or a 10, they're 4 times more likely to expect a significant increase in their staffing spend with you. And you've earned that right to go in and say, hey, I know this is working really well. We love it. Seems like you're happy with it. Let's talk about what else we can be doing. And that's a great place to get referrals, also a great place to get expansion opportunities as well. One of the things that I think is really interesting is how little as an industry we put into the sales enablement side of things. And so as an industry, we do a pretty good job typically on the marketing side and the brand marketing specifically. And then we do a really good job on the sales side. This is an industry, more so than the other industries that we focus on, that is really, really sales oriented, has a really professional sales organizations, sales leadership, so on and so forth. But what we do see is very little on the sales enablement side. And the way that we think about this is sales enablement is really that sort of marketing and sales dance that happens that bridges somebody from that consideration set into successfully coming on board and working with your firm. And so these are things such as reports, trends, data that is value add as a part of this. And I would just encourage you to look at, okay, we're working so hard to get these leads for our sales team, but are we working hard enough to make them really impactful when they're in the room? Are there things that we can give them, data, trends, proprietary research? What can we do to where every time that salesperson is meeting with somebody, the person on the other side of the table or the other side of the Zoom call is emerging from that call better informed, better educated, even if they're not doing something with you right away. What can we do that really leaves them in a better place where they have a positive impression of you and the firm? And that's the types of things that really, really matter. Not the tchotchkes, but make them better at their job. Give them information, education about their job, and invest in that sales enablement piece. Helping customers get creative to find top talent. This is the example that I use was from a large logistics customer, and they were having a hard time filling their positions, and they had some turnover. And the staffing firm executive that I was talking to said, well, we met with them and we asked them, we said, well, are all these requirements still hard requirements? Oh yeah, absolutely. They're all hard requirements. And we asked them, well, one of them is the English. They have to speak English proficiently. Why is that a hard requirement? Well, all of our safety signs, it's not safe for them if they can't read and respond in English and communicate in English, then they're not going to be safe because all of the manuals, all the safety signs are all in English. And they said, well, what would it cost if we were to run those all in Spanish? So you have them in English and in Spanish. And they ran the numbers on it. It was like a $10,000, $15,000 investment. And ultimately, it about doubled the size of the candidate pool. And they made really meaningful progress with improved retention and improved acquisition on those sides. So again, think of creatively what you can ask. Don't just be taking the orders, be helping to really refine the orders, really push back. Is this necessary? Do we have to have this? Why do we need this? Why do we need 5 years experience? Why not 3? Okay, well, maybe we could do 3 as long as they had these other things, right? Really understand what the opportunities are there, and you'll be doing a lot of really good work for your team. This is the one place where I'm going to show you some product related things. This is Amplify Recruiter that we brought out actually earlier in this year. It's been really, really successful launch. And really the focus on this and the reason why we brought this to market was that the recruiter level reputation really matters. That is the point of the spear for many of you that are reaching out into the marketplace and helping them not only show up as a verified recruiter so that people don't think it's a scam or that they're getting pressured in that way, but also being able to take that next step and really help them bolster their own reputation so that people are really confident and trust them and are looking forward to working with them. The other cool thing that we've seen that we didn't really think about as we launched this, but that's been really, really impactful is that now we actually have the ability for them to really have a lot of pride in the reputation, in the service that they're delivering. It's actually been really good for retention as well of these recruiters. So just be thinking about like whether it's this product or a different product, how are you actually driving that reputation of your individual recruiter because it really does matter as a part of it. The retention piece is such a critical component as well. We are actually still at a very low unemployment rate, historically low unemployment rate. And so if somebody leaves from an assignment, not only does that the number one drive of dissatisfaction with customers is unexpected turnover, but in addition to that, it is really, really disruptive to you. You're ultimately having to go do the same work twice, incur additional expenses as a part of it, even if you do get to place that person again. So really focusing on that component is pretty key. One of the things that we know from the research that we've done is about half of all turnover happens in that first week. And of that, about half happens after the first day. So you really, when you look at these moments of truth, you really want to make sure that you index to a really high touch, high support environment on those first couple of days and that first week as a part of it, and make sure that you're getting people off on a really positive note. And then the last, but certainly not least, and then I'm happy to take some questions from the audience. The rehire rate is such an underutilized piece of this, an underutilized focus area for staffing firms. But this is truly found money. And I'm just going to encourage everybody on this call, to think about doing some kind of a spiff for your recruiters. Almost never do I actually hear of people that are doing some kind of a bonus or a spiff based on placing somebody that has recently come off an assignment within your organization. But if you do that, just go back of the envelope. And in most firms, you'll find that you're not only are you less risky of turnover because they've just completed successfully another assignment with you, but you are going to incur significantly less in your unemployment insurance. You're going to incur less on the job posting. You don't have to background check again. Presumably, you don't have to drug check again. All of these things that you've already done that save you time and money as a part of this are really, really critical. And when I've done this sort of back of the envelope, it's typically in the $2,000 to $3,000 to $4,000 range, just in hard costs, not even in the efficiency from a recruiter standpoint. So why are we not giving $500 to a recruiter when they just saved the company $3,000, $2,000? That is the easiest spiff to do, right? If you told me that I could pay $500 and realistically get $2,000, I would do it all day. This is sort of arbitrage, right? This is bonus arbitrage. And we have to do a better job of taking advantage of that as well. So with that, I want to thank everybody for being here on the call today. I do have some time for Q&A, and I'm happy to take questions there as well. Are you seeing people do more surveys during this time period, or are scores going up or down? Two different questions, but I'm happy to answer both of them. Yeah, we are seeing actually people as the economic uncertainty. You see people go one of two ways. They either try to pull everything in and they're afraid to ask for feedback, or what we see more so is actually people asking more regularly because they realize that, hey, we're already under some financial pressure. We can't have a shock to the system that we're not expecting. So we need to stay very, very close to our revenue, and that means staying very, very close to our customers. As far as the scores are considering, the scores actually hit an all-time high in 2020. And then they've kind of leveled out as a part of this within our system. Overall, when you look at the industry side of it, the scores have come up again, and I think that has a lot to do. We saw this in 2009 as well. We saw it in 2020. Anytime when the industry's under economic duress, we stay closer to our customers. We do the nice little things that maybe don't happen the rest of the time, that red carpet treatment. And so the scores tend to go up. I think that as we get into 2025 and 2026, start to get back to industry growth, that'll be one of the places where we'll want to make sure that we keep doing those little things that matter so much to customers and keep customers engaged and happy with us as well. What do you think is the biggest risk that we have going into 2025? That's a really good question. I think there's certainly some global disruption risk. I think there's still some of that out there as a part of this. I think that we've been at close to full employment for a long time. And so I think that we are, a little bit of a risk there. But I think the most controllable risk that we have as an industry is making sure that we are really clear on what our value proposition is, and that value proposition continues to resonate with our customers and with our job candidates. Because that's, I think, the biggest existential risk that we have is that people are thinking about how they solve their work-related problems in a number of different ways. And I do think that those ways are starting to erode a little bit some of the opportunities for staffing. So we just have to be really, really good at executing. We have to know where we add significant value, and we have to continue to go and do that. It looks like I've gotten through the open questions, and so I'll give you a few minutes back in your day. But I just wanted to thank everybody for taking part in the call today and engaging with that. Again, the slides and the recording will be made available. So we'll have those out to you in the next couple of days. And I hope that you have a wonderful rest of the week. Thanks so much. If there's anything that my team or I can do to be helpful, please do reach out.